Hey, what up, YouTube? It's your boy, the Stock Dude, back on the prowl again. If this happens to be the first time that you're stopping by this channel, first of all, I want to thank you and welcome you to this channel. Secondly, I want to ask that you hit that subscribe button and show your boy some love. If you're looking for an investment vehicle that'll help you diversify your portfolio at the same time by allowing you to receive a 10.5% dividend payment paid on a monthly basis. If this is something that interests you, I got something for you, man. So let's get right to it and let's get this thing moving. The investment vehicle that I'm talking about goes by the name of the Global X Russell 2000 Covered Call ETF Fund, ticker symbol RYLD, and it's coming in at a price of $25.25. Now, I covered this in a video a few weeks ago. Since then, it has broken out to all-time new highs. And I'm looking at this stock chart and I can see that this fund has been in an uptrend since September of 2020. And as you can see, it's gradually been just churning higher and higher and higher. And I see right here, as of this date of May the 10th, we hit a lot of resistance at the level of about $25.10, and that resistance forced the price lower. But as you can see on this date, May the 12th, we had a lot of buyers that came in and decided to buy shares of this ETF fund, and has since then pushed this price up beyond this major area of resistance of $25.10. Now, why that's significant is this: because once the stock price pushes up and breaks through what used to be a major area of resistance, that major area of resistance now acts as a major area of support, supporting that price. And it's very unlikely that anytime soon that price of this ETF fund will break much lower than the $25 mark. Now, I said all of that to say this. What that means is the price of this ETF fund is going up. It's going higher. Right now, RYLD is coming in at a price of $25.25. And the price is headed higher. Now, as I said before, it has a dividend yield of 10.53% annual yield. 10.53% annual yield. Now, this yield is not just your average dividend. This dividend is paid on a monthly basis. Now, I'm looking at the Dividend Channel's website, and this company is relatively new in paying this dividend. They've only been paying a dividend since May of 2019. So roughly 2 years. But don't let that scare you, because this dividend is rock solid. And as of the past year to year and a half, the price of the dividend payment has been consistently rising. Now, this fund is an ETF fund. As I said before, this will give you diversity in your portfolio, because it's not good to have all of your eggs in just one basket. You don't want too much in technology stocks. You don't want too much in EV stocks, because when they fall, your portfolio will tumble right along with them. And the way to avoid that happening is that you can have your portfolio well diversified, where you have different stocks in many different sectors. That way you're not susceptible to huge swings in your portfolio's balance. Now, this fund is actively managed. Once again, this Global X Russell 2000 Covered Call ETF fund is an actively managed fund, and it has an expense ratio of 0.6%. Now, some people may look at that expense ratio as rather high, 0.6%. Let me explain to you how this stuff works. The average actively managed portfolio expense ratio is normally between 0.5 and actually 1.0%. So this falls in the middle. Now, the reason that people may consider this a high expense ratio is because they're comparing it to passively managed funds such as the Vanguard ETFs that they offer out there. Now, those Vanguard ETFs expense ratio is around 0.2 maybe to 0.3%, which is about half of what this actively managed fund charges. Now, I'll put it to you like this. If you have two vehicles, one of them is a Mercedes and one of them is a Geo Metro. The Geo Metro is a car, but it don't ride like that Mercedes. In other words, you're going to get exactly what you pay for. A Metro and a Mercedes are two different vehicles altogether. Just like this fund, which is an actively managed fund, is a totally different vehicle than a passively managed fund such as the Vanguard ETFs. So you can't compare the prices because they're two different vehicles altogether. One is actively managed, which brings a higher price that the portfolio managers charge, because actively managed means that they're actually watching your investment and making adjustments along the way. The Vanguard ETF funds are passively managed. Basically what that means is that money comes out of your checking account, directly invested into these ETF funds, and nobody is watching them. That's why the expense ratio is so low, because they're passively managed. In other words, they're on autopilot. So once again, they're two different vehicles all together. Now, actively managed funds, to me, in my opinion, and I am not a stock expert, nor do I play one on YouTube, but in my opinion, actively managed funds give you peace of mind, because when I go to sleep, I don't have any question or any qualms or problems about what my money is doing. I feel that my money is safe and secure because I got human eyeballs watching my investment. Don't have to worry about it. Now, this Global X Russell 2000 Covered Call ETF once again pays a dividend of 10.53% annually, but it's paid to you on a monthly basis of 25 cents per share. Just to give you an idea, if you own 1,000 shares, that will mean $250 will be inserted in your account each and every month. Now, we have what's known as the Rule of 72 that comes into play on this Global X Russell 2000 Covered Call Fund. Now, this Rule of 72 is basically going to give you an estimate of how long it takes to double your money when you invest in a fund such as this. So the Rule of 72 works just like this. You divide your yield. You take 72 and you divide your yield. So 72 divided by 10.53, which is the yield of this fund. And this is going to give you an average of years of how long it'll take to double your money based on the performance of these dividends, which are coming monthly. And I'll come up with 6.83 years, and your money can double based off of the performance of this fund as well as dividends. Now, this fund will allow you to take advantage of compound interest. Compound interest is one of the greatest things that you can ever have your money invested in, because compound interest creates like what's known as like a snowball effect. Imagine a small snowball rolling down a hill in the snow. Starts out small, but it builds momentum as it rolls down the hill. And as the momentum builds, it has an avalanche effect. That's what these funds that invest in compound interest, that's what these funds that use the power of compound interest, that's what they do. They take your small amount of money and consistently build the momentum of your account. And as your account grows and grows, before you know it, you have an avalanche of cash. And that is what you want, and that is what I want. So as I said, I did this video a few weeks ago on the Global X Russell 2000 Covered Call ETF. And as I explained before, this ETF is set up is very unique because what they do is they buy shares of stock in companies that are in the Russell 2000 index, and they sell covered calls to create income against the shares of stock that they own. And that extra income is what allows them to consistently pay a dividend as high as 10.53% on a yearly basis. And the way the fund is set up, they choose to make those payments to you and those payments to me each and every month, so we can start our snowball to rolling down that hill and bring your portfolio and my portfolio to all-time new highs. If you found this video helpful to you in any way, I ask that you please show your boy some love and hit that subscribe button and notification bell and come back and join us, because we do this every week. I'm the one known as the stock dude, and I'll holler at you later. Peace.